This event is a part of our members information series, and it forms a part of our webinar productions organized on a monthly basis to help us to bring interesting topics to our members, topics that will assist in the management of their firms, topics of a national development interest, and topics that we hope will contribute to their ability to manage their firms and to do better business here and across the various markets that they may have an interest in. Now, all of our webinars are recorded, and therefore, in the event that you missed any aspect of the production, you can go to our YouTube channel. You can subscribe to us on YouTube. You can also follow us on our Facebook page, and you can visit our SBA TV segment on our website, www.sba.bb. So fear not, if it is that throughout the presentation you missed an interesting point, you can always go back and watch the broadcast after the presentation. Also, as another housekeeping matter, let me inform that at the end of the presentation, we're going to post a link in the chat segment for you to complete a very short evaluation tool. Just a few questions, takes maybe about 5 minutes for you to simply share your thoughts on the presentation today. This is our feedback mechanism. It helps us to improve the quality of our webinars to you, our stakeholders. We want to know what has been the impact of events like these. So please stay on the call immediately after and complete that evaluation tool. As I said, just about 5 minutes, but we want you to share your thoughts with us. And finally, before I introduce our speaker today, let me remind you that immediately after the presentation, there will be an opportunity for questions, comments, queries on the presentation. And therefore, we're asking you to please get your notepads. I know this is the age of technology, so get your tablets and iPhones and whatever other device you use, but jot your questions down, jot your thoughts down. And please, at the end of the session, we're going to invite you to pose those questions in the chat. We're using the chat feature on this Zoom platform to receive your questions, to receive your comments, and our presenter will have the opportunity during that segment to respond to your queries, to your questions, your comments, etc. So please remember that you are to keep your mics muted. We will assist you if you need us to do so, and throughout the presentation. And at the end of the presentation, you'll have the opportunity for questions and answer from our presenter. You simply pose your questions in the chat segment. So that's it in terms of our housekeeping. Once again, welcome to this webinar today. As I said, a part of the members educational series. And those of you who are here know that last week we had to postpone because of an issue outside of our control, and we're very thankful that our presenter and all the other colleagues in Jamaica are faring well following the earthquake that would have impacted that country, and therefore rendered us unable last week to have our webinar. So we thank you for coming back this week, coming back today, and being a part of the session today. So without further ado, colleagues, Professor Robinson, no stranger to the Small Business Association. He's facilitated a number of our webinars in the past, but just in case you may not know, Professor Justin Robinson, he is a national of St. Vincent and the Grenadines, and he's currently a pro-vice chancellor and a principal of the University of the West Indies. He's responsible for academic quality assurance across the UWI and the various campuses in the region. He obtained his PhD in finance from the University of Manchester in the UK. He also holds a Master's of Science in Finance and Econometrics from Florida International University and a Bachelor's of Science in Management Studies, first class honors from the University of the West Indies, Cave Hill campus here in Barbados. Professor Robinson's research interests are capital markets in developing countries, public finance, financial risk management, and corporate finance in developing countries. He currently serves as the director of the Central Bank of Barbados, JMMB, International Hibisco, and he's also the first vice president of the Barbados Museum and Historical Society. So a brief bio sketch on our presenter today. It is my pleasure at this time, colleagues, to present to us as we distill this topic of the social security system and the self-employed. Is it a benefit or burden? Let us welcome Professor Justin Robinson. Over to you, Dr.
Okay,
Robinson.
good morning, Madam President. Thank you for that very kind introduction. And good morning to the participants online as we engage this topic. So I will do a PowerPoint which will focus maybe on some factual information. I mean, a lot of this information is available elsewhere, but at least you can have the PowerPoint, which I will share with the SBA, and you can have that as one means that you have that sort of factual information to hand. And then I'm hoping we can engage in a sort of conversation around the broad topic. I did serve on the Social Security Scheme Board here for 10 years, either as chair or deputy chair. But I don't think I have a bias in terms of the benefit versus the curse. So I'm going to share my screen as we seek to get into the topic. So the first thing I want to do to some extent is to define, and I think this might set the tone in terms of answering the question, benefit versus curse. So in a sense, what is national insurance or social insurance really about? And we think it's really about income replacement. That as you go through life, there are a series of events that can occur. And as a result of those events, you will be without an income or your normal level of income for a period of time. And the Social Security scheme is really a mechanism to replace some or all of your income during that event. So obvious ones would be an illness or an injury. You are sick, you are injured, and you cannot work. So therefore, you are not generating your income. Retirement, you are retired, old age, you're too old to work. And again, you are without an income. There's a hurricane, there's a storm. I mean, in Jamaica, there was recently an earthquake. You can't function. So again, you don't have an income. The pandemic was a classic example of that. So really, the Social Security schemes are basically one mechanism through which you can replace income loss due to one or more of those events. So looking at it through those lenses, I would think that, or I would put forward that social insurance or some income replacement mechanism is likely to be more important for the self-employed than the others who are employed by an organization, because in the event, so we had the eruption here in Jamaica for about 2 days. People couldn't function normally for a variety of reasons. But for persons who are employed, it really would not affect your ability or the salary you would get at the end of the month. That's a sort of contractual arrangement. Maybe if you were paid by the hour, there may have been an impact. But a self-employed person who couldn't put their wares out or couldn't offer their services, their income would have been impacted. And I think this came home quite clearly to me during the COVID-19 pandemic. I mean, I have a lot of good friends and academic collaborators in India. And as I was describing to them what was happening in Barbados, they were saying, but the Indian government just could not even begin to contemplate something like that. Because India is one of these unique places where about 80% of their population is self-employed. So if you do a lockdown and people can't go out to sell their goods or services, exactly how does that work? So a mechanism to replace lost income due to these life events, I think, is especially important for the self-employed, because these events directly impact or can directly impact in terms of their ability to sell their goods and services and generate an income. And if you are self-employed, you may have employees who are then employed under a different type of contract where you have to service. So I think it's more important. I think the question becomes whether the social insurance scheme, say in Barbados, whether the design of it makes it a useful or even optimal mechanism for persons who are self-employed to provide themselves with an income replacement mechanism due to a number of these types of events. Because your alternatives really are private savings, private insurance type mechanisms. And whether it's a benefit or a curse, I would then suggest, is a function of the design of the scheme as to whether or not it suits the cash flow patterns of self-employed persons and or offers a range of benefits that are suited. What I will now try to do is very quickly go through some of the traditional design features of our Social Security scheme in Barbados as it relates to the self-employed. Highlight then some of the proposed reforms, and then we can maybe come back down and opine on whether it's a blessing or a curse. Okay, so we have a definition of the self-employed in Barbados. And in many ways, I don't think it's a controversial definition. So I wouldn't see the way the scheme defines a self-employed person as either blessing or curse. I think it's a reasonable sort of definition that meets international best practice and also within the laws of most countries over the age of 16, under the NIS age, and who's not under contract of service as defined in our law. So there's a pretty clear, non-controversial definition of a self-employed person in Barbados. Although, of course, given the nature of business persons will from time to time seek to push the definition. But the definition of a self-employed person is well established, clearly defined by the NIS. It is well established within case law. And there is, from an employer viewpoint, there isn't really much of a case for ignorance. Again, a further sort of definition there. And again, I think those definitions are pretty clear and pretty standard. And again, if there are any questions or concerns around the definitions that might impact self-employed persons. It'd be very useful for me to hear about that, because it's certainly always useful to hear from the persons in the field, and I can certainly feed back some of that to the powers that be. Okay, so before the current set of reforms, what were the benefits available to self-employed persons in Barbados? So again, in terms of the blessing versus curse, so again, I think, as I said, I think that that depends on the design features of the scheme. So the benefits offered by the scheme, do they fit the needs of self-employed persons? So there's a sickness benefit, maternity benefit, invalidity pension or grant, old age contributory pension or grant, funeral grant, survivor's pension or grant. So those were the 6 benefits that were really covered. And I suppose those 6 are useful in and of themselves, but certainly in terms of the schemes being benefit or curse or fit for purpose, we would see 2 glaring omissions, or 2 omissions, one which was always an issue, and the second which arose with the pandemic. So the first that was always an issue and we were always discussing was the sort of employment injury benefit. Because in many ways, for a self-employed person, you're a mechanic or something like that, you suffer an injury and you cannot work. That benefit was not true. That was clearly an omission. And in some of the discussions that I've been in, there seemed to be a concern about compliance, how do you monitor, and so on. But that clearly was an important, I would think that for a self-employed person, employment injury is one of potentially a major disruptor to their ability to work and earn an income. And the absence of that benefit certainly would have served as a disincentive for persons using the scheme and reducing the benefit of the scheme to persons like that. The second, which arose with the pandemic, and I suppose many policymakers alive weren't aware of it, we haven't had prolonged disruptions in the history of Barbados, was really what you may call a business disruption benefit, a business disruption type of benefit. Again, a lockdown, a hurricane that does serious damage and businesses disrupted, serious flooding or something like that. So the benefits traditionally available, I would argue in terms of being fit for purpose, there were sort of those 2 omissions. One, which has been discussed a lot, the employment injury benefit. And the second, which really came into consciousness a lot with the COVID-19 pandemic, a sort of business disruption benefit. So again, I sort of so self-employed persons were not eligible for employment injury benefit and unemployment benefit. Again, they're not required to contribute towards those funds. In a way, the unemployment, in a way, is the self-employed equivalent maybe of a business disruption to some extent. So again, the business disruption or business cessation, the pandemic sort of brought that to the fore, and there was a one-off benefit there. So that's one feature of the scheme then that can help influence whether we think of it as a benefit or a curse, or another way I think of saying the same thing, is it fit for purpose? So one would have been the package of benefits available. And the package of benefits available, I think, omitted, you had two problems or two missing benefits: the employment injury as well as the business cessation or disruption. A second issue really is the payment schedule. And again, I'm just sort of trying to provide the factual information there for persons who might not have it. This is available in other places, but to sort of summarize that quickly, what is the issue here with this payment schedule for the contribution? So for people like myself who have an employer, there's a salary every month, hopefully, that's going to come in, the employer is going to deduct, and the NIS contribution schedule, or how are you required to pay your contributions? Now, the issue that we've often discussed and raised as well, how does the NIS required contribution schedule fit with the income flow of a self-employed person, where that money may not come in a smooth pattern? There are periods of feast and periods of famine, ups and downs. So clearly, if the payment schedule that the NIS scheme requires does not fit the cash flow pattern of a range of the self-employed, then the scheme certainly has the potential to be a burden or a curse for those. And many would argue that the strict payment schedules in place are certainly not ideally suited or well suited to the cash flow patterns, especially in light of the fact that when the payment schedules are not met, then penalties are incurred. So I've certainly been of the view for a long time that the payment schedule for self-employed contributors that was traditionally required was a disincentive, a bit of a burden on the self-employed, in that the schedule of payments required did not necessarily fit with the cash flow pattern of the self-employed persons, and that was further compounded by a penalty for late payment. So again, you have these schedules, these are when they are due, and if you don't meet them, you have a problem. So clearly that's something that needed to be fixed. Okay, so the payment schedule. So I would argue that the traditional payment schedule was a bit of a burden, was something of a curse for the self-employed, in that it did not pay adequate attention to the peculiarities or the potential irregularities in their cash flow. Now, third issue would be, well, the structure of your payments and contributions. And again, the earnings ceiling up to a maximum of $4,880 per month, $1,126 per week, and a minimum of 21 a week. And in terms of assessing these relative to the self-employed, I'm of the view that the issue is not so much the amount, but the whole design of the scheme. And that's feeding through. It's really built around the notion of somebody earning a regular income, whether it's weekly or monthly. So again, here I'm of the view that not so much the amount is the issue, but the design is built around someone earning a regular weekly, monthly income, which again doesn't fit the cash flow patterns of areas for the self-employed. Yes, again, that just repeats the contributions. Okay. So again, these are just some details. And again, you're gonna have the PowerPoint. I trust that many of you are familiar. And there's also the potential for persons to add some voluntary contributions on ceasing employment. They can continue to do that. So, as many are aware, and probably was the trigger for this webinar, there are some new initiatives on the table as part of Social Security reform in Barbados. And I had the privilege of being part of a core group coming up with some of the recommendations. And some new initiatives are part of that, targeted at correcting some of the problems. So as I said, self-employed persons will be offered benefits for injuries on the job without increased contribution. So that's one of the proposed reforms, because I guess there was a strong view on the committee that employment injury was a major risk, a major source of lost income for a number of self-employed persons, and that having such a benefit would solve a problem for the self-employed, make the scheme more of a benefit for them, and making them more likely and willing to comply. Also, in terms of having contributions fit, having the whole pattern of payments fit the more likely irregular cash flow pattern of the self-employed. The proposal is there will be no more requirement for self-employed contributors to fill out a form, no due date for NIS payments, and therefore no penalties for being late. So these individuals will be able to submit their contributions for the year at a date during that year. And again, that's really designed to give the self-employed the flexibility to make their contributions more in line with their cash flow patterns. And again, my advice would be is that you try to pay as regularly as if you can, because if you leave something for a one-off payment, there's often a temptation not to do it. But then the cash flow pattern is something that we are trying to fix here by trying to remove that requirement. Okay, so again, we sort of think that this can happen phases, that relatively quickly, self-employed person will have to pay their contributions without having to complete schedules or specify a period. Again, they can make their payments digitally. They would receive confirmation of their payment via email. There'll be an online interface which allows the self-employed to view their submitted contribution payments. And again, they can pay at any time during the year. And it'll be interesting to hear from an audience of many people who are familiar with the self-employed space, where certainly within the confines of that committee, there was a strong view that giving that cash flow flexibility, which may more closely fit the cash flow schedule or income schedule of the self-employed, was potentially quite a useful or solving a problem. And then as we go forward, that this would become more solidified by the ability to use Easy Pay and a more detailed structure. So What I would want to suggest then is that the current reforms for NIS in Barbados do begin to go, in my opinion, some way to making the Social Security scheme here more of a benefit to the self-employed rather than a curse. Because the self-employed do have a greater need for income replacement due to life events than, in many ways, some of the people who have an employer. And the reforms really are seeking to address two things. One, adding a benefit that was not there before, which is potentially important to the self-employed, that being injuries on the job. And then in terms of how you pay your contributions, when you pay the structure, to make that rather more flexible, rather than the default design, which is really built around the notion of regular monthly, weekly payments or quarterly payments on a schedule, which may not fit. So again, I'm of the view that though these proposals go some way to making it more of a benefit than a curse. Now, I think the next question then, so there has been a reform of the NIS or proposed reforms that are meant to address some of the problems. I think, so there is more of a benefit for complying. The other issue, I think, for the self-employed is, well, I guess by law, you're required to comply. You're required to be part of the scheme. So it's not supposed to be an option. So I can't encourage you in illegality or entertain that. The extent to which you want to supplement or top up that coverage with some private insurance schemes, private pension planning, and other types of schemes. Now, so one, I think it's useful if your income permits to do that top up. In terms of planning for income replacement in finance, we think our best practice is that you should have several pillars. So in terms of planning for income replacement, we would suggest that the best practice is that you employ several pillars. So the NIS is one pillar. Some people think of the NIS as a minimum pillar. You know, that is the basement. And I think the proposed reforms do go, and the increased flexibility do go some way to making that a useful minimum pillar, a base pillar. But the advice is that you should have other pillars that provide you with some additional insurance against loss of income and the need to replace your income. So again, there are private insurance policies and private pension type schemes. And again, persons would be well advised to really explore such schemes and make a choice based on value for money. And as far as possible, try to have at least two pillars to provide for your income replacement. So in summarizing or ending the presentation, and then opening it up hopefully for a conversation, I would argue that the proposed reforms to the Social Security scheme in Barbados create the potential for that scheme to be a benefit to the self-employed as they seek to have mechanisms for income replacement. Life is inevitably risky. Some of us are not as lucky as others. So there are going to be any number of events that are going to affect your level of income. So providing for income replacement is important. And the reforms in the NIS scheme in Barbados to provide employment injury benefit and a greater degree of flexibility in how contributions are paid, how and when, does improve its capacity to be a benefit. We still don't have a business disruption benefit. So I think that's still an omission, but we've had 2 useful improvements. But I would also urge the self-employed, like anybody else, to view the NIS scheme as simply one pillar in your income replacement matrix, and that you seek to build other pillars in the private space, such as private insurance, private savings, and investment mechanisms, pension schemes, as you seek to provide for yourself and have the life you deserve. I thank you.
All right, thank you very much, Professor Robinson, for your thoughts thus far. Colleagues, in our webinar today, we have approximately 20 minutes now for our Q&A segment. And as our presenter shared before, he's looking forward to the discussion. So please go right ahead and pose your questions, comments in the chat. Professor, I'm seeing that Angela has started the ball first. So if you can just take a look at the question there. And let's commence the conversation. I want to start off, if I may, by asking, Professor, we all agree that we may not be able to rely solely on the national insurance scheme. That's a fact. Given its limitations in structure, its limitations in benefit, etc. And ideally, the self-employed person should look at having, other pillars, other sources of revenue that they can rely on in the event of some sort of disruption. Based on your own research and experience in the field, what is considered in terms of a best practice, a good match for the self-employed person in pursuing this and planning and charting the path for their future? They want to sit and plan with their financial advisors and the like. What is considered a good match for the self-employed person?
And when you say a match, what do you mean?
A match in terms of maybe a percentage, if you will, of focus and of interest in some sort of insurance,
a percentage of your pre-retirement income
scheme. Sorry?
Are you thinking like in terms of a percentage of your pre-retirement income, for example?
Right. So you wanna make a contribution, let's say the national insurance. You as a self-employed person usually determine, based on your revenues and your projections and so on, what that schedule would be, quarterly, monthly, etc. And you want to maybe look at some private investments and private insurance and pension schemes and so on. And you want to get a sense of how do I go about determining what may very well be a good match for me, and the percentage that I should maybe set aside for the private providers versus the government social security program.
Okay, right. So yeah, that's a good question. So if we think of, say, retirement as one event, now when a person moves into retirement, you lose the income. So, but we typically expect there should be some changes in your expense profile. So, for example, you should not, hopefully not, you don't have like a mortgage payment, which is a significant payment, and a number of other of your loan payments. So certainly in terms of your planning, one of the things you do want to do, if you're looking at your retirement age, you would want to, put it simply, have as many of your loans paid off by the time you get retirement. You really don't want to be carrying large loan service. And financial institutions, even in terms of being responsible lenders, should be careful extending certain facilities, people going beyond the normal retirement age, unless those persons have a clear potential to keep working long beyond that. So there should be a decline in your expense profile because of certain payments and mortgages and things like that that are no longer there. So the normal ratio is 60% of your pre-retirement income. That is usually the standard target, that in retirement, you want to have an income that's at least 60% of your pre-retirement income. Now, NIS will only give you up to the earnings ceiling. So in terms of what you would target from private would be the difference between 60% of your pre-retirement income and what you would get up to the ceiling from NIS. Now, one of the expenses that becomes a challenge, or issues that becomes a challenge in retirement, is medical. Okay, so in Barbados, in theory, we have free healthcare, but many people don't necessarily, well, people might not. Increasingly, Barbadians don't seem to want to rely on the public healthcare system for their healthcare needs. And as you get older, you can't really get new healthcare insurance. So healthcare insurance, or some sort of health insurance which you take out while you are young and healthy, seems to be a critical part of planning, again, for the self-employed, because the self-employed persons also tend to be more time sensitive. Your time is a lot more sensitive. So self-employed persons rarely spending hours in a healthcare facility waiting for care. You just giving up a day or two to go to a polyclinic or the QEH is much more damaging for a self-employed person, because again, the nature of your work, your time is a lot more sensitive. So having some sort of private health insurance that you can access private services, even while you are working and pre and after you retire, seems to be very important, because again, the employed with a firm, there are benefits on the health side that you may carry into retirement. But again, the self-employed doesn't have that. So 60% of your pre-retirement income is often a benchmark that is widely used in financial circles as a minimum of what you want to have. You want to have at least 60%. So in terms of your planning, what is the gap between the NIS ceiling and that 60% of your pre-retirement income? Not easy, not easy to do when you have a high cost of living.
Tell me about it. I'm here saying to myself, 60%. Wow, that's a lot of planning that yes, we have to do. I would think 60% is a tall order, but we appreciate that. That is what is proposed as best practice by the financial advisors. And I think the ceiling right now with national insurance is about 51.20.
Yes, 51.20 is the new ceiling.
Yeah. So there you go. All right.
I see some questions in the chat.
Yes, there are quite a few questions here.
Right.
Yes.
So one of the things I would say that is going to be very important going forward is one thing to have a more flexible scheme, but that more flexible contribution scheme for the self-employed, I think, is triggering a lot of the questions there. If I can pay them anytime, how do I determine? So I think it's going to be extremely important for one, that some detail be provided to the self-employed. Okay, so because I think so far we've had like a ministerial statement. So the NIS, I think, needs to take it upon itself to provide some details and maybe go a little further and provide some suggested schedules, provide some guidance. So if you, okay, so there are these contributions set in the law, minimum number of contributions, all of these things. If you are to be compliant, these are some payment schedules that you can seek to follow. Otherwise, persons can really find themselves scrambling or having to make that calculation themselves. I mean, the advantage of the system we have now is that the system we have before, you know what you have to pay and by when. You don't have to invest a lot of time and energy in figuring it out, but it might not fit your cash flow. Now you have something more flexible. You now have to figure out a structure as to how and when you're going to pay for you to qualify and meet all of the requirements. And I think that can be a bit burdensome for a number of self-employed who are busy running businesses up and down. And in the implementation, in a sense, there needs to be some implementation guidelines. And I would recommend and would be advocating for some suggested approaches as to how persons might structure their contributions in the new, more flexible way. Which I think is an important advance and recognition. Because I think when this scheme was initially designed, it was really thinking of a lot of people who are working weekly, getting paid weekly, fortnightly, monthly, and then they're contributing from that. And it is changing. So in places like St. Vincent, Dominica, they have quite sophisticated schemes around the self-employed because quite a big chunk of the population is like that. People are fishermen, farmers. So I know in St. Vincent, the NIS guys are quite active going to certain sites where the fishermen are to collect the contributions and working with them and the farmers. We've had a large formal sector in Barbados. So it hasn't been a problem, but we're seeing more and more people going down that self-employed route and adapting. For instance, Barbados playing catch up. So I think that general approach I was mentioning there might answer some of the questions that are raised there. In that I think it's going to be a burden if it's left on all of the self-employed to figure out how they're going to make their contributions in this new, more flexible way. And they should be provided with some guidance, some sample approaches. You know, like again, it's similar to like if you go into a financial advisor, okay, I want to get here. This is how my money normally comes in. How might I structure that? And maybe the SBA might put on a little seminar or webinar like that, maybe to help your members. Because what is out there is a little bit generic right now.
Agreed. All right, let's go through as many as we can. There's one here about National Insurance Clearance Certificate. Can you address that one? I think that's the first one from Angela. Is there going to be a greater ease in obtaining the certificate?
Yes, so that's a very good question that I noted that I have to feed into the powers that be, because if you are now going to be more flexible, how do you determine whether somebody is compliant or not at a particular point in the year? Huh? Because the proposed reform says you can come in on a day in the year and pay up for the whole year. So if somebody chooses that pattern, are they non-compliant until they do that or not? So I think that's a very important question that has to be addressed in terms of the flexibility with getting that compliant. Because in my opinion, the only way you are not compliant is if a year passes and you don't pay in anything. So, but again, I could see that bureaucrats could get a little uncomfortable with that. But if you're giving, I think it's something to advocate for, because if you're giving people something, I always believe you should give it to them. Don't burden it with a whole set of complications. So if you're making it more flexible, but then you can't get the compliance certificate unless you pay on a more regular schedule, then And it's almost like, you're not really giving it. So that's a very important point, and I want to thank the person for that, because I've already sort of set that off somewhere to think, you're going to have to deal with this. Because if you're going to be flexible with the contributions.
I mean, that was one of the challenges with the business interruption mechanism that was introduced during COVID, because, you determine a cutoff point, not paying attention to the fact that self-employed persons who, for example, chose to pay quarterly or semi-annually and so on,
Exactly.
may not have been current, inverted commas, based on your schedule, but based on their payment system, they were. So I think
so that's a very
there's still some
important
areas
point.
that insurance has to attend to.
Yeah, so there's still some work to do to implement in a manner that really meets the need. Because what I would say is, I've served on a lot of government committees under different administrations, but I would say this particular committee, and I think people like Senator Crystal Drakes in particular made really strong advocacy around the needs of the self-employed. And there was a big push to really do something to make the scheme more of a benefit and not a curse.
Than a burden.
Yeah, not a burden to the self-employed.
Right. Right now, there are many who think it is a burden. If you look at the comments here,
yes,
look at this question here about a waiver. Shouldn't a waiver program have been introduced before embarking on the new pay-as-you-earn reform system? So how do you treat to the, to any arrears, if we can call them that a person may be liable for?
Yeah, and I think that fits within the notion that if you are facing a new reality where a growing chunk of the population is self-employed, there's this gap in the number of NIS contributors, of which a significant number of that gap, I think, must be persons who are self-employed. It's difficult to see that we've lost that much population, and that much of the adult population. But if you're trying to fix the problem and you are introducing, which for government are some significant changes in the scheme, because much of this was discussed a lot in my 10 years on the NIS board, but it certainly was a view that it was that what has now been agreed to was too loose and difficult to police. But if you're facing a reality that a significant chunk of your labor force is now self-employed, they face the risk of income replacement like everybody else, maybe more acutely so. You're introducing some reforms. So if you need to clear the deck and do waivers so that persons can now participate in the scheme, again, I think these are all part of what you need to do. In many cases, sometimes I find we give something, but we burden it with so many things, or the things that we don't think of, that then affect how useful what you are trying to do ends up being to the party. So certainly some kind of waiver to clear the deck, again, could be part of paving the way for the scheme to be more of a benefit to the self-employed.
Well, you see, while we are putting together our thoughts here, Professor, on areas that we need to advocate on, take a look at this point relative to the fact that the NIS does not provide for a hybrid contributor. Remember, this is a conversation we had even internally amongst a couple of members. There's no hybrid contributor. So you're not sure if to really register as self-employed versus being an employee of your own company, because your company in law is a person. Your company is a limited liability company.
Yes.
Whereas NABS Insurance want to see you strictly as self-employed, you are an employee of that company. So I think the point here being made by Dawn, and there are a couple of derivative questions, if you look at the post, this is interesting and warrants, you know, maybe inclusion in this body of comments that you're preparing for the committee, for submission to the committee, right? You know, you you're not just an employee, but based on the definition, they say you are self-employed as well. So concerning an individual whose time is almost equally split between being an employee and a self-employed person, you know, they really only got 50% covered due to their categorization, based on the national insurance definition. So, you know, explain what are the benefits really to the individual. Where should they really be you know, categorized?
So I think, okay, yeah, okay. So this is Dawn. Trust Dawn to spot a deep issue there.
And she has a few additional points onto that about the
Right.
benefits.
So it's clear that the reforms don't envisage adequately this type of person. And this type of person. So clearly that's another gap, I would say. So I think that's useful. And it's a number that can grow, because with the corporation tax rate being so low now, there certainly is an incentive for persons to incorporate and have
hold your breath on that one, because the Prime Minister is making a ministerial statement as we speak that tax rate may go back up now from 5 to
right, but still it would still be a lot less than what it was before. I think we have to have a minimum tax of 15%. But what I suspect the governments will do is have a tax rate of 15%, but offer benefits, tax rebates to get people back down to the 5. Yeah, so clearly the scheme, the reforms don't deal with this person. I think this is a interesting, complicated one, Don. I don't have a ready answer. I sort of have to think through that. And I would, as to how you would design a scheme that provides, so clearly the person is only 50% covered. I think I can agree with that. That's pretty clear. How would you design a scheme for this individual that really makes the scheme a benefit for them? Of course, one of the limitations is that you can't be all things to all men. So there may be some category, all women, maybe some categories of persons that the second pillar may end up having to be a lot more important for them because of the nature of what they do. Yes, and the second point is something we pushed for but didn't get. Hasn't come out yet. For periods of sickness which are not job related, such as surgery, recovery. Again, we see those as, and certainly there was a push to have that we weren't successful there, but I do support that because, you know, again, if you are a self-employed person and you come down with one of these illnesses, you have to have surgery or out for a while. Again, these don't think, you don't actually have adequate coverage. I mean, the maximum NIS pension now, I think, is about 24, somewhere about $2,600 a month. That's really the sort of top of the scale that you are going to get. So that's the other part, the average pension versus, so it's really about 66% of the earning ceiling. So that's really the thing with the NIS. It's not so much your average income. It's really the percentage of the earning ceiling. So you can really expect in Barbados, if you are paying at the top end, that the maximum is about $2,600 or so a month is your maximum. And our scheme is one that has a big transfer of wealth to some extent, because we have the highest minimum pension in the region. So there's still a sizable chunk of our workforce that based on what they earn, if they pay all their contributions, what we call their formula pension, the pension they would get from the formula is below a certain threshold. So they are automatically topped up. I mean, I think that's something worth fighting for and keeping for the persons at the end. So again, I think this segues back to Leonard's earlier question that the standard is you should really plan for 60% of your pre-retirement income. So if you work that out, if you're paying at the top of the NIS, you're going to get about 2,700. So the gap between that, you need to plan for that from your second pillar.
But you see, this needs Professor, to be escalated, I think, to the committee and onward to the National Insurance Board and management, because I'd say to you that a significant number of our members, for example, fall into this category where they may just have 50% coverage because they're being categorized as self-employed by national insurance, but they are actually employees in a company. They may be the shareholder, yes, but it is still a company. And when I hear the numbers being bandied around up there, that there's this percentage of persons not contributing to national insurance and all that, I don't think that the scheme maybe is doing enough to educate and to unlock that category of person that is
it's an important point, and
an employee.
And I would say that category of person didn't really attract a lot of discussion on how to deal with. So yeah, so that's an important, useful point to follow up on. As to usually, as with most things, there's nothing new under the sun. So there must be other schemes, other practices that are dealing with this type of hybrid and how you might structure it. So it's clearly an area for some research.
And then I'm seeing that Marcia is making a point here that your benefits, inverted commas, can be potentially declined if you don't qualify for the same benefits based on the list of conditions. So in essence, and I go back to Poland and others, I'm hearing in the comments here, some uncertainty relative to if this thing is really a benefit to the self-employed. If it is that you're paying, but then there are no guarantees that you'll get the benefit. And the two areas that you mentioned at the very beginning of your presentation, Professor, are significant. They are important to self-employed persons, right? The issue of a medical benefit, self-employed people get sick. They want to know that their scheme will be there for them. And yes, with all of the issues around climate change and the disruption caused by natural disasters, you can have business, interruption, and for the self-employed.
So again, I sort of think of this through the income replacement lens. So on the medical end, our NIS scheme is not meant to cover medical expenses. Our NIS scheme is designed that if you are ill and you can't work, during that period when you are too ill to work, you lose income. So how you replace that income. Now, clearly that affects both employed and self-employed people equally. Okay, so am I hearing that persons of the view that the current schemes and the proposals don't provide? What is it that you think are not being provided? Is it income replacement during illness or the cost of medical care? Because I'm not so clear on that.
All right.
But the scheme is not meant to provide for the cost of medical care for anybody. It provides for income replacement.
Income replacement is definitely a concern that I'm seeing here in some of the comments.
Because you are not well enough to work.
Mm-hmm. And you would want to know that your national insurance scheme can address that. So definitely I'm seeing here income
Yeah,
replacement.
I'm of the view that this scheme does that. I mean, they may not do it smoothly. So, okay, so this is so again, it might be a compliance issue. So I'm seeing down people are submitting claims and are declined due to not meeting certain conditions. Okay, so now I'm clearer that it's really more like because the scheme it is supposed to provide for income replacement during illness, whether you are employed or self-employed. What wasn't provided for the self-employed prior to the current reform was employment injury. So that has been added, but there may be a compliance issue here now in terms of whether you meet certain conditions, etc., which I can't really comment too much on what conditions they may or may not cover, but that's certainly a problem in terms of or compliance issue. But the scheme is meant to provide you income replacement when you are ill, and there isn't the design of the scheme doesn't differentiate between employed traditionally versus self-employed. Where the self-employed were discriminated against before is that they couldn't get employment injury. Now they are proposed to get that. And certainly schemes need to evolve in terms of the notions of conditions that are covered, because we have new sets of chronic non-communicable diseases, there are issues around what is covered. So that's certainly an issue in terms of what are the conditions that might be covered. Maybe mental health isn't covered, but I don't think that's an especially self-employed issue. That's a generic issue in terms of what does the scheme define as legitimate medical conditions that for which you can get income replacement if you are out because of that. And it's I'm saying it's an important issue in terms of the scheme benefiting people. But I also want to reiterate a second point that the NIS scheme, Social Security, is a complicated insurance product. You know, you're trying to cover a country, many different types of people, etc. And it's probably hard to find a private insurance product that seeks to provide as many things in one product. So you have a series of trade-offs. I mean, the most obvious one is what I mentioned earlier, where the higher income earners, I mean, I certainly remember a colleague of mine, when they got their first NIS check, they convinced it had to be a mistake. And I'm like, but you are a big socialist. You should understand this. You know, you are subsidizing the people at the bottom by getting a much more. So there are a lot of trade-offs. So it's very important, I think, to have, depending on your needs, to have that second pillar. By all means, advocate for the NIS to give you as much as you can get, so it's a benefit for you. But I think with such a complicated scheme, catering to such a wide range of people, the second pillar can be very important, even to that hybrid group. That hybrid group is very interesting. And I guess my immediate advice to that hybrid group, work on your second pillar, because the peculiarities there might be a challenge, but I have to do some homework on how other people are dealing with that.
Mm-hmm. I see that Anderson Lowe would have offered some thoughts earlier. He's a financial advisor, and he was looking at the formula, because maybe that was my first question. He was looking at the formula that a self-employed person or the entrepreneur, for that matter, can consider. The concern I have, Professor, is that a lot of persons, even on this call, don't have the if I can use the Prime Minister's language, the wiggle room, don't have the wherewithal to consider a second investment instrument. The national insurance scheme is all that they really can afford. And I think because of that, primarily because of that, it is incumbent on us to try to get it right for self-employed. We use the term self-employed, but in this case, can we talk about small business persons? Because we're saying, and I think that ought to have been the focus of national insurance, right? In these reforms, talking about small business persons who are not just only self-employed, but they are employees of small companies. So it really should have been, a focus on small business persons. We have a formal sector here, you rightly said, that is relatively big compared to some of the OECS countries. And we insist that you must go and register, you must go and incorporate, limit your liability, but then you're not making a provision for them in this scheme. And as I said, this is what small business persons deem to be affordable to them.
So let me ask a question. So how might you see the scheme accommodating a hybrid person? I'm kind of curious. How do you see that?
And actually, at the end of it, I was going to suggest, Professor, that we may need now to bring the national insurance management on a call like this and have a conversation with some of our members.
Because I don't think
I know that my former chairman, Charles Scott, who I think I saw on the call earlier, he's been having the same challenge, because he's an employee in the company, man. Granted, he's a shareholder, but he's being asked to register as self-employed and therefore not benefiting. So I think, that's a conversation that we really need to have.
Yeah, I think it's an important because I'm just reflecting. I think it has a lot of legal implications as well and compliance implications. So I don't, as I say, it didn't really come up as that category of workers, which is interesting because there was conversations with various organizations, but that hybrid person didn't come up. And it'd be interesting to hear how persons think such a contribution scheme structure might work. Because I guess my instant reaction for persons in that category is that other 50% should be your second pillar. That's sort of...
Someone is here telling you clearly no other pillars, and they written here, no other pillars. They have no other opportunity to have other pillars, right? I think this is a conversation that we need to have in the next phase with national insurance folks.
Yeah, no,
because to some extent, the persons on this call, some of them are like employees in the other category that you identified earlier. They are like employees. Yeah. Where the company pays a portion of their national insurance.
Right, because I'm seeing Dawn's point there, and I was thinking about that, but my initial quick math in my head is that, well, it might vary, but whether that would be a benefit to a self-employed because of that earning ceiling. But if you start dumping that into the NIS, so this works for persons if one of their income streams doesn't take them up to the maximum. Because if one of your income streams takes you up to the earning ceiling, there isn't really a benefit for you from putting the other bit in there. So if you need both income streams to get up to the maximum, then that works well for you. But if any one of your income stream gets you in the vicinity of the ceiling, then doing your own, if people don't like the term pillar, then doing your own private planning with the other stream seems more to your advantage than putting everything into the pot. So it will depend on that combination. Because I was thinking of okay, why not have persons register all the streams? But I was thinking, because I'm thinking even though I am employed, my self-employed stream probably takes me to the ceiling. So why would I want to put that into the pot?
Okay.
So it might
So
not be
last
ideal.
comment. Last comment. I'm seeing here. If you're working in a highly dangerous job and you're both employed and self-employed, and you undercovered by national insurance alone?
Okay, so the dangerous part. So what I'm hearing is there may be some modality, there may be some issues with accessing income replacement for medical reasons. Because that's where the danger would come in, where you have that risk of being out of work because you are injured. Now the employment injury comes in there. But I'm still thinking, Don, that whether you end up being undercovered or not depends on the sum total of your employed plus self-employed income. Because if you're forced to register self-employed and your self-employed income doesn't take you up to the ceiling, then you clearly are undercovered. You have a problem. But if your self-employed takes you up to the ceiling or close, I'm not sure there's really any real benefit for you from putting the rest into the pot. So again, even within that hybrid group, it would really, whether the scheme is whether being fully in the scheme is a benefit or not, will depend on where you fall, how much you're earning.
How much you register with national insurance to?
Yeah,
to make that contribution on, be it quarterly or monthly or what?
Exactly, because that would be
that's a good point.
Yeah, the ceiling there.
All right, so I don't think Professor,
you shouldn't be giving you shouldn't be letting the government into any more of your business than you have to,
Sorry?
I'm saying you really don't want to be letting the government into any more of your business than you have to.
Of course, agreed. But I was gonna make the point that I don't know that based on this conversation, we have conclusively made the point that it is a benefit.
I think it's moving in the right direction. Can we agree on there's a step in the right direction? A step.
I don't know if we can conclusively make that point, because some persons in the comments are saying, "My this thing is a burden," So there's still further review and amendment that is needed.
I think there are a lot of
to this scheme.
Yeah, I mean, I think there are a lot of very good points made here that I have to go and sit down with some people and have some conversations. And do some work of my own as well as to how.
Yeah, I agree. I think early in the first quarter of the new year, 2024, we need to come back. We need to come back, Professor,
and see
have a conversation with the membership, have a conversation with maybe the national insurance management. Someone even said the actuary could be invited too, but we need to come back and explore this some more.
Because
before the amendments to the national insurance scheme are concluded. We need to explore this some more, I believe.
And a lot of burden is placed on NIS to come with the actual implementation details. So I think it's important to have that conversation.
Yes, agreed. So we're out of time. We know that it's a very hectic time for small firms. So we try not to go too long in these sessions. Professor, we know that you're currently off island. You're still off island. So we're thankful for the time that you've been able to share with us on the Zoom platform. So colleagues, we are concluding our session now. Thankfully, Professor is safe. He and family, they're all safe following the earthquake in Jamaica. So he was able to be with us today. We've had very, very good feedback. I'm glad, Professor, that our members have been able to input into your thought process and how
Yes, yes, it's been very
this
useful.
program can be improved upon. So we are proposing, colleagues, to come back, and God willing, in early 2024, and maybe the first quarter, we can bring back Professor and some of the national insurance personnel to continue this conversation before the amendments are finalized, so you can really get the input from small business persons, not just self-employed, not just
Yes,
the
yes.
self-employed, but small business
Yeah, that's
persons,
important.
on how we can improve this process. So thank you very much. The feedback tool, colleagues, is there in the chat. Please go to the chat now and click on the link, and please fill out this form for us, giving us some valuable information on your perspectives on today's session, that we can improve upon it. Let me just also remind the members on the call that our independence event is coming up. As you know, we try to have in the month of November a networking event, and we're not going to disappoint, like, for this year, 2023. So on the 29th of November, please join us at the SBA Secretariat for our Independence Members Networking event. 29th of November, that is the day before Independence Day. So please join us for that event here at the SBA Secretariat. You can join us from noon, anytime from noon on that day. Join us for our members networking event. So, Professor, once again, as usual, a pleasure having you with us. You're now a de facto associate member of the SBA.
Yes, and again, thank you very much. I really enjoyed the session, and I love these sessions because I think I learned more than you did today, and I always love those sessions. So that's a brilliant session for me. So again, thanks for the chance
Thank you
to
very much.
engage.
Thank you too. And colleagues, remember, they said at the beginning, I conclude by repeating that the session was recorded. So you'll be able to go back to either Facebook or YouTube channel on our website in our SBA TV segment. And you can review this if you wish, review the PowerPoint presentation that was shared. So that's it then, colleagues. We've gone way over our time, but we thank you so much for your patience. Please complete the feedback tool that has been posted. We thank Professor Robinson again for coming and sharing, and we look forward to the follow-up that we will have, God willing, in 2024. We try to have this at least in the first quarter of 2024 before these national insurance amendments have been concluded. So thank you once again. God bless you, and we look forward to seeing you on the 29th of November for our independence event, our members networking line, right here at the Secretariat office, Harbor Road, from noon on that day right up. Games, lots of Bajan delicacies. I'm told some karaoke as well. So we're looking forward to a fun time on the 29th of November for our pre-independence event. Thank you all. Goodbye. God bless you. Have a good day, everyone. See you on the next occasion. Bye-bye for now.